Trading indicators are a lot less important than people think. And you might be wondering, well, you have a YouTube channel and you have a lot of videos on trading indicators and trading charts and all these different fancy things and tools for entries and exit positions. Yeah, well, the thing is that what people want is not exactly what they need. So there's a lot of people that do a lot of searches. And in order for me to educate them, the things that people want is not exactly what they need. Let that soak in for a minute. So a lot of people want indicators. They want the perfect entries, but there's a lot of times not the perfect entry. It's very rare that you get a perfect entry. Instead, what's more important is the money management aspect. Money management, capital management, it's way more critical and important. And the reason for that is because there's not any one indicator is 100% accurate. So the more important question is that when you go into a trade and when you do a trade, the question is, well, how much money are you putting into that single trade or position? Because if you're not 100% accurate every time, well, how do you know how much money to put in? So the thing is that it's the money management, the capital management. That's way more critical and more important. But do most people search for these things online? No, they're searching for the indicator. They're searching for best entry positions. They're searching for how much more often they can be right rather than money management and capital management. Let that soak in for a bit. Anyways, so when we look at things like this and we go into a trade, let's say we're just using a basic indicator of going in when the moving average is in there or above the moving average and then getting out when it's under the moving average. And here I've just color coded it for simplicity's sake of just showing you this concept. So let's say we get into this position and we get out of this position here. So we got in, we got out, and look, we made a tiny, tiny bit. Okay, that sounds good or great. It's a very small amount. Or here we get in, but the position is wrong. Well, let's say in this position, I've risked $1,000 and I've broken even pretty much. Okay, in this position, I've put in also $1,000. But here I've let it continue to go down and down and down. So with that position, what's happening is I continue to lose money. In this case, and maybe I lost $3,000, okay, because the position continues to go down. So my point here is that if I've positioned incorrectly and I've let the trade continue to move, well, I've lost $3,000 on this trade, even though the indicator here to me told me to get in at first. And then over here, this one, I might have made $1,000 or broken even. The point is that if I've put too much money into a trade that does not work, well, all of a sudden, I've flopped and I'm not doing so well. In the same case here, where let's say you get into this position here, here's a nice green bar, and then you're kind of rolling back over. If I didn't manage it properly, hey, that's another loss. And you might say, well, how often can that happen? Well, it can happen because if you're not if you're not staying to the rules, you're not sticking to your discipline, you're not sticking to your psychology mentality, you could get stopped out a lot more than often than you think. So my point here is that no indicator is fully accurate, because let's say you're trading over here and you're trading hindsight. So when you have this hindsight behind it, you're getting into this position, indicator saying you're going in, but then the next day, all of a sudden, you've got this down bar and you've got yourself a pretty significant big loss. So even though the indicator was there, it was bullish, but if you risked $10,000 and this had a big drawdown of that amount, well, all of a sudden, even though your indicator was bullish, it's still above this moving average. So I'm still looking to stay bullish, but I've had this nasty bar against me, and now I'm down $10,000. Whereas maybe in the other case, I'm making $1,000 or making $3,000. But here, if that one big loss takes me out, all of a sudden, yeah, positioning sucks. So the point is that, again, no indicator is not 100% accurate. There's no indicator out there that'll be 100% accurate. So the point that you have to do is look at how to manage money correctly, how to position size. So when we look at these things, it's important to recognize that these indicators are not perfect. And what people are searching for is a better accuracy. Well, if you go in with an accuracy of, let's say, maybe already a 50% chance where you do a coin flip. Now you're bumping it up to 53%. Does it really matter that much? Not really, because position managing and money management is way more critical than trying to go from a 50 to a 53. I've got people that I've talked to in the past that only have a 20% win rate. But what do most retailers want? They want a 60% or 70% win rate. But if you got a 20% win rate, can you still be profitable? Absolutely. Because let's say you're losing $100 per trade and you're losing a ton of these. But then when your big trade comes in and you actually win, you might win $2,000. So are you still profitable? Yeah, you could have a ton of losers. You could have 100 losers over, or $100 of losers all over the place, but then you win that one big one and you're fine because you position properly accordingly and work the trade in the right way. So don't worry about those indicators trying to become very accurate, very precise. It's not everything. It's not as important as you think. So my point in making this video for you is to share with you some insight that, it's probably not as important. You probably already have the tools and knowledge that you need when it comes to trading indicators, when it comes to learning technical analysis. It's the position sizing, it's the money management part that you're probably lacking, which is not what a lot of people teach. And I really only teach that actually when I deal with people one-on-one, because it's not what people want as far as on YouTube side or when they go online searching for videos and content, because it's not going to get the results. It's not going to get the search results that people are looking for, because what they want is one thing. But really what they need is something completely different. And that's the downside. It's unfortunate because they don't know what they don't know. And until you see that, until you're aware of that, until you understand that, you're going to continue searching for those indicators that give you just a few little more percentage points, even though it's not going to help you that much. When in fact, it's the risk management, the money management, position management that's going to be much more important. Anyways, hope that helps, gives you a little insight, maybe a little bit of a deeper thought behind it. Truly appreciate you joining me, and I will see you in the next video. Take care.